Hello, happy traders. How are you? I hope you guys are good. Guys, thank you for liking and subscribing my channel. So, guys, I'm very happy that you guys have been trading. So, guys, let's talk about trend trading strategies, guys. If you are a conservative in outlook, then a trend trading, sometimes called a trend following, may be your favorite betting bet in strategy. It relies on the old trading age. Let the trend be a friend. Guys, it's very simple. Sometimes it's also be compared to one of the Newton's law. Okay, the law says that a body in motion tends to remain in motion unless acted upon by some external forces. Similarly, the trend trading code is simply experts say the existing trend will continue and trade accordingly. A quick glance at a trading chart will show you an evidence that this is half of the time you'll find the prices are consistently either going up or going down, and you're also showing a trend. Having decided that you want to follow a trend following strategy, you have to come up with the two conditions. First, when you will be decided that the trend is happening with a sufficient confidence that it's worth you entering the bet. And second, when you will consider that the trend is over and you should exit the trade preferably for the profit. So first you need to identify the trend. Sometimes it will seem obviously that you simply have to look at the chart, but unless you can quantify exactly when you want to place a bet, you may not achieve the consistent results on your trading. The fact is that an uptrend there will always be a pullback or retracement. Depending on time scale that you use when drawing the chart, you may even see an uptrend on a weekly chart or a downtrend on. But generally, you want to look at the chart for the type of trading you are doing. For instance, if you check for your trades every night, you will mainly look at the daily charts, and the definition of an uptrend is that each successive peak is at higher price and each successive low is at a lower point on a retracement and is also at a higher price. Similarly, for the downtrend, each successive low point is at a lower level and a successive peak is on also a lower level. The formula that allows you to look at the chart confirms that by definition there is an uptrend or downtrend. You can also use for a longer term MACD to identify the overall trend and eventually to facilitate your entry and exit points. With this strategy, you can plot say a MACD on the chart anytime the price is above the MACD and buy zone. The average is heading up. There is an assurance that the trend is up, and you should the price drop back, fall back on MACD. It signs that the uptrend has failed and you should exit the trade. You should experiment with this number of period that you use for a MACD. The greater the number and the fewer, the more certain your trades will be. With a short sell on MACD, you will be chopping in and out of the trade much more and will lose more on spreads. Assume you have placed on the bet and the stock that is clearly trending, you need to protect yourself against the reversal in the price that will take away your profit. If you're not able to watch the market all the time, you'll find your trading stop as a useful tool for offer to a raw dealer. The trading stop is a movable stop order which the price touches and it becomes a market order to sell. The level of a stop order follows behind the price at a distance or a price difference that you can set an uptrend. The trailing or stop orders never goes down and it just ratchet up the price increases. Once the trend is over and the price starts to fall, the trading stops with the position closed with a minimum loss. This happening automatically whether or not the losing market. So it is often to look on the profit you are avoiding price back down to the starting point. When you use the trailing stop, the only question is how far set to below the price is. You can set at a fixed value or a brokers allow the percentage setting. You need to review the price volatility to great idea with the optimal value. If you set too close to price, they run the risk and you will take out the trades on a pullback where there is a still good trend in a place where you should set a further away your losses before the trade is closed. If the trend is truly finished, a good rule of thumb is set is about to twice as first you will expect the price pullback to avoid premature existing. In summary, the trend following is a logical conservative strategy that works for a million of traders. You simply set your entry and exit parameter using a reasonable criteria, guys. So guys, thank you for liking and watching this video. I hope you guys would learn something from this. Until then, follow the trend. Trend is your friend. Happy learning, happy trading, best wishes.